Welcome back, everybody. I hope you're having a great weekend wherever you are. It is January 29th of 2022, and it is a Saturday on the East Coast where I'm at. So I hope you're having a fantastic weekend. Let's take a look at Bitcoin and talk about the Pi cycle indicator and see where we're at. So right now we are still on watch. We are waiting to see if Bitcoin is going to pick that final bottom and head off into the retracement like we've been talking about, to see if we are going to set a lower high and then roll over and continue downward and maybe try to set a lower low, which would continue and confirm a more sustained downtrend. Or are we going to set a lower high, maybe roll over and then come back up and continue on from there? So until we get there, we won't know, but that's what we're on the look for. This is the daily chart that I'm looking at. And when I'm doing price action, I use standard charting when I'm looking at hourly, 4-hourly, daily, things like that. When I'm looking at swing trades and shorter term trades, things like that, which normally I'm a longer term swing trade, more long-term cycles. But here on this downtrend, I've been doing a few more shorter term time frames to kind of hone my skills, because it's very difficult to trade downtrends like this. Much easier to trade uptrends. Bull cycles are much easier to trade than down cycles, down markets, bear markets. So if you're down right now, either personally or in your account, and you're having trouble and difficulty, don't feel bad. This is very difficult. A lot of people are struggling with this. Even skilled traders have a hard time in a down market. So it's very difficult to do well here, especially if you don't use leverage, and leverage can wipe you out. So I do spot only. I do not use leverage. I just buy and sell. I'm opportunistic, looking for value wherever I can find it. So when I'm doing this, I'm looking at the standard chart versus logarithmic, so I can see the price action more vertical and more see these moves and catch these moves. But we're going to look at the logarithmic scale today in terms of the Bitcoin price. And what the log scale does for you is it shows you a more smoothed out version so that you can see the adoption curve. That's what this is. The chart of Bitcoin is basically the adoption life cycle of a technology. That's what you're looking at. This is how technology evolves. This is how adoption works. And that's what you're looking at. And you're looking at the emotional peaks and valleys, the tops and the bottoms of an adoption curve of an emerging technology. So that's what the price action is all about. And that's what we're looking at. So we talked about this Pi cycle top indicator. This is very interesting. You can Google that. And there's some information out there about the Pi cycle top, what it is. It's made up of two moving averages and a multiple of 1. To create an indicator, this is the first 2011 top. It didn't pick that one up. I don't know that the indicator goes back that far, or if even price action, it's, again, based on the moving averages, wasn't enough time in yet. So it picked this first one in 2013, this first little one before the second one. A lot of people thought that maybe we were doing something like this in terms of the recent market cycle, where we had this little bump in the curve before the all-time high, when people were thinking we were going to go to 100,000, 300,000 here recently. They were thinking 2013 is what we were looking at. But, price was very different back then. It's a whole different ball game going from 100 to 1,200 than it is going from 4,000 or 20,000 to 100,000 and 300,000. Whole different level of price action there. And of course, here's the 2017 cycle top. And then now recently the Pi cycle top indicator picked 64,000 as the top. So that brings in the question. There's been a lot of speculation out there, what happened here if this was really the peak? If we are in a bear market, and if this bear market's going to continue, if the theory we're looking at is that we're going to bottom, we're going to retrace up into that Fibonacci, 618 to 702, which is that 48 to 58,000 range, or somewhere 4550 to 60,000, somewhere up in there. If we retrace up in there, put in a lower high and roll over, and then put a lower low in into more of a sustained downtrend bear market, then it's really interesting that this then could just be the irregular correction that a lot of people are talking about. There's an Elliott wave theory of an irregular correction that kind of shows you what this could potentially have been, and that very well could be, and that this was just obviously the whales and larger investors were kind of pumping price up to these all-time highs to get one more chance to exit into retail. before we've started down. And that's what these moves were all about. We're getting price back up here again, but there just wasn't a lot of buying pressure up here, not a lot of interest at these price levels. So just an interesting theory in terms of the pi cycle top and what it predicted in terms of cycle peaks in the past. And it did not predict it here, or didn't not predict it, but it didn't, this lagging indicators, of course. So price has to get there before it hits, but it didn't post that here. So very interesting. And it'll be interesting to see as we go along if it pinpoints that in the future at some point. Next thing to look at in terms of long-term growth is the logarithmic growth curve. Interesting indicator to look at, or chart to look at, kind of shows you the peaks and valleys of Bitcoin in the past. And with an emerging technology like this, you get, higher spikes and lower valleys, higher peaks, lower valleys, quicker, shorter over the time. And then your peak to peak price increments, the peak from $31 to $1,100, then from $1,100 to, let me get it over here, $19,000. And then of course, from 19,000 to 69, obviously the returns are diminishing. So whether we're seeing lengthening cycles, cycle would be, from the valley to the peak, cycle to cycle. Then there's the Bitcoin 4-year cycle where the halving occurs, or some people call it a halvening, however you like to label that. That's where the supply gets cut in half every 4 years. That's in rewards to miners. Some people, think that the 4-year cycle, price will peak and dip, from in those 4-year cycles from peak to peak, that's going to lengthen, that cycles from bottoms to tops are going to lengthen. But as we saw, economic events can come in and disrupt cycles. So are we in lengthening cycles? We're definitely seeing diminishing returns. It really doesn't matter at the end of the day. This is, again, the adoption growth curve of an emerging technology, of a new technology. This is how it works. And as this technology becomes more broadly scale adopted and we get more capital into the space, price is going to level out and become even more consistent. And as Bitcoin continues to establish itself, or establishes itself, it hasn't done it yet, but it's in the process of establishing itself as a store of value, it will stabilize a little bit more and be more consistent. But again, you're going to see diminishing returns if that's the case. So right now it's trying to establish a base. And, as an investor, that's what I look at. What's my worst case scenario? What's my best case scenario? Right now, this $30,000 level shows a worst case scenario recently, in recent history, that the threshold of the buying pressure, the support, that people will not let Bitcoin go past. There's a lot of interest in that price point of $30,000. I think it would take a serious economic event for Bitcoin to break that level and go down to much lower levels, like we saw in March of 2020 in the pandemic, when it went to $4,000. So as we move onward and upward from here, what can we potentially expect to see, and how high could price go in the future? So what I like to look at is, we're on this death cross theory of a bottoming pattern, where the death cross occurred exactly so many days from the peak, both times in this recent cycle. It didn't do it in the past, but in these two cycles here, it was exact same amount of days to that death cross. It was really, really interesting to kind of look at that and see how that occurred. So if we take a peek at where we're at now, so this was June, July 2021, June and July of 2021, that bottom to the $69,000 peak was 112 days. And if we come over here and we say February-ish, if we bottom in that February 14 timeframe, and we come over 116 days, and we kind of use the same theory, which is, just under 4 months, that puts you in about, middle of June, June 11 of 2022. And if we look at how much did Bitcoin increase at that point, that was about 130%. So if we go over here and we just say from 35,000, come up 130%, it's $82,000. So potentially one of the things that I'm looking at that, and that's why I look at these charts. I'm not a technical analyst. I'm not a chartist. I follow the technical analysis of the experts out there that have been doing this forever. but I like to look at patterns. I like to look at price action. And if this works out here, like we're projecting, and this bottoms anywhere in the next couple of weeks, like we're projecting, and moves on to that retracement, and if we don't get that lower high and roll over, I mean, obviously we'll set a lower high, but if it continues up, we don't get the lower high and roll over, then it'll be interesting to see if we kind of follow this pattern on up again in terms of the amount of time, 3 or 4 months that it takes to get up, and see if we can extend back up into that 80,000 range, which I think is the next reasonable increment to get to on the way to 100,000. I think 100,000 is a reasonable level to expect for Bitcoin. I don't think that that's an unreasonable level that people would be disinterested in, because if your downside is 30,000 and 1, 2, 3 times that you're going to come back, you're kind of putting a floor in, like we did here in that 3,000 to 4,000 range in the worst potential situations. So we could be establishing a floor moving forward. Again, it could get broken by an economic event. You never know what could go on, conflict around the world. Markets generally, if we have to enter a conflict somewhere somehow, markets might dip for a little bit, but they will come back. So that's kind of what I'm looking at with these indicators here in terms of what's the potential upside if we get a retracement, and we've been talking about it. Bottom here, retrace back into that 618,702 level, could be in that $45,000, $50,000 range, maybe up to 60. And then that's your lower high, roll over, come in, set a lower low. Then you're down, continuing and confirming a bear market trend, which again, when you say bear market crypto winter, what does that really mean? More of a sustained longer term consolidation period of a year or more, probably 6 months to a year, maybe 2 years, somewhere around there. I don't know that it'll be as long as it's been in the past, because there is so many more people coming into the space. There's a lot more adoption, a lot more interest in Bitcoin and cryptocurrencies right now. So I don't know that we'll see those long-term sustained bear markets like we've seen, but I also don't think we're going to see 100,000, 300,000, 500,000 in the next 6 months either. I think maybe 100,000 is realistic potentially in the next year, before the end of the year. Potentially, like I said, that 75, 80,000 range, probably 80,000 would be our next high that we could shoot for before we see any kind of a pullback. And then, repeat this whole cycle again that we're in right here. So we could potentially be seeing, this could be our new norm as we inch our way up, versus these big peaks and valleys like we've been seeing. Obviously, this is a big valley here. This is a big valley here we're creating, but you're always going to get your pullbacks. But I think our approach to the top could be more like what we're seeing here, where we come up, we drop, we retrace, come up, we drop, we retrace, come up. So we could see a sustained, a more incremental increase like that. And if you look at other more traditional markets and look at the price action in the Dow, almost something kind of like that is what we're seeing. If you look at how the Dow has operated, of course, everything's, dropping right now, but over the course of years in the Dow Jones Industrial Average, if we look at the S&P, you can kind of see the same kind of thing, where it's more, you're kind of coming up, rolling over, coming up, rolling over, coming up. NASDAQ is probably what we're tracking closer to. NASDAQ's got a little bit more of these sharp peaks. Again, technology, but as it's leveled off here over the last 10 years, or over the last year and a half, you're seeing more of a rollover kind of a price action going on. And in the past, after the big .com bust, you see these rollovers versus these more sharp peaks. So that could be what happens as Bitcoin continues to establish itself as more of a store of value type of an asset, and moves more away from being a straight up risk asset, which is what it is right now. And until it establishes itself a firm base, a threshold that investors are confident that it's not going to break that $30,000 level, then it can be more consistent in sustaining that store of value. So, excuse me. I have a dry throat. So I hope you enjoyed that. I hope you have a great rest of the weekend. I will see you on the next video.